Hey, everybody. Welcome. Thanks for joining me today. My name is Rich Westermeyer with Benesmart. We're going to take a few minutes to wait and just give everybody some time to get situated here on LinkedIn. Glad you're joining me, whether you're on LinkedIn or YouTube. Happy to have you today to talk about how we're helping our clients reduce their health insurance costs without sacrificing coverage. As we wait a few moments for everybody to pop in, do me a favor, head on over to the chat and drop a message in the chat. Let us know where you're watching from today. And also let us know in the form of an emoji what your most recent renewal experience had you feeling like. So drop an emoji in there and tell us how health insurance has you feeling today. We'll give it a couple minutes and then we're going to go ahead and get started here. For those of you just jumping on now, if you got a chance, head on over to the chat, drop a message, let us know where you're calling in from today, and also post an emoji that tells us a little bit about how you feel about your health insurance. We're going to maybe give it 2 more minutes, and as soon as that time's up, I'll go ahead and get started with the presentation today. All right, guys, maybe another 60 seconds here. We'll give people some time to get on and get situated. And then we'll start diving right into how we're helping our clients reduce health insurance costs without sacrificing coverage. If you're just joining us, head over to the chat, drop an emoji, and tell us exactly how your health insurance makes you feel. Curious to see how emotionally damaged we all are. All right, and on that note, guys, I'm going to go ahead and get started. So today our big topic is how to reduce health insurance costs without sacrificing coverage. Here's the thing. Most companies today are throwing away money when it comes to health insurance, and they don't even know it. Effective cost management requires transparency. If you don't know where your money's going within any expense category, you can't make informed decisions to control or reduce it. So that's why our first tip today is to manage your inputs, not your outputs. Look, if your expense management strategy begins when you get your renewal, you're already late to the party. This is, by definition, a reactive strategy. Now, I know many of us have probably been there before. A short time frame to make things happen. We get a bad renewal, and then all of a sudden, finding a new carrier becomes urgent, or we're just responding to whatever the carrier gives us at renewal time. What we suggest is to take a proactive approach. So let's talk real quick about what some of these reactive approaches are so we can know that we don't want to be doing these anymore. If you've ever had to raise your deductibles in an effort to save costs, that's a reactive approach. If you've ever had to implement an HSA or an HRA in an effort to shift some of the costs, also a reactive approach. Look, I know we've all been there. Maybe you found yourself playing the carrier ping pong game, jumping from one insurance carrier to the next every few years. The fact of the matter is these are not expense management strategies. These are only short-term solutions at best, And frankly, it's just a Band-Aid. Here's the secret. Your insurance costs are directly tied to the cost of care that your employees use. By actively managing how services are priced and delivered, businesses can reduce costs without sacrificing coverage, i.e., manage the inputs, and you'll end up with better outputs. So let's hit on 3 ways that you can start managing your inputs today. Number 1, ensure cost-effective pricing for care. This can be done in a multitude of ways, whether it's directly contracting with a local hospital facility, or maybe it's directly contracting for surgeries. Taking a look at your network and doing a network evaluation and figuring out just how much does your network price the services at, and maybe finding a network that has a lower cost of care. Or maybe you want to get real aggressive and move to a reference-based pricing style approach. And then a real easy entry to giving transparency and pricing to your employees is to use price transparency tools. The next thing you can do is eliminate waste in your prescription drug spending. This is what we like to call low-hanging fruit in your health plan because it's really easy to do. Just simply carve out your pharmacy benefit manager. Move away from the big 3 that control the market. And while you're doing that, implement a specialty medication sourcing program. And then lastly, make sure that you demand pass-through pricing from your PBM. It's a great idea to actually read your PBM contract too. And then a third suggestion would be to use alternative primary care models. This could be something like an on-site or near-site clinic if your company is large enough, or maybe if you're a smaller organization, you look at direct primary care doctors, or even something as simple as a nurse management program to help your employees seek cost-effective care. Look, here's the thing. You don't have to overthink this and you don't have to do it all. Just pick one strategy and build from there. That's exactly what Pittsburgh Pipe did when prescription costs were eating up their claim spend. They opted to drop their PBM and then put in place an independent PBM, one that wouldn't favor expensive brand name drugs and one that would frankly pass the rebates right along to the client, even when cheaper clinically identical alternatives were available. So what we help them do is we help them carve out their PBM and replace it with an independent transparent PBM, passing all rebates back to the plan itself. And at the same time, we implemented a specialty medication sourcing program, gaining huge access, gaining huge discounts to drugs. The result, the company saved significantly on specialty medications while employees were still able to get the same medications at a lower cost. No coverage was cut, just smarter management of the inputs, leading the company to maintaining the same spend without an increase for 3 years in a row. Your next renewal is likely just around the corner. Don't find yourself overpaying again. If you want more information, DM me transparency to request a complimentary health risk scorecard that will break down and uncover key cost drivers in your health plan today. Your employees are feeling it, guys, every single paycheck. Meanwhile, your providers keep taking the profits. That's why tip number 2 is to reduce your fixed costs, whether it be your stop loss, your TPA fees, maybe even your broker fees or network access fees. Don't assume that fixed costs are non-negotiable. Stop loss carriers often bake in hidden margins, leaving you to pay more year after year. TPAs overcharge for administrative services. Sometimes you don't even know what you get. Network access fees don't always equate to the proper discounts that your plan needs to control its costs. And finally, when it comes to broker fees, I hate to say it, but they're opaque at best and misaligned at worst. Every dollar spent on your fixed costs should be pulling its own weight. You can see here in this quick breakdown, we already talked about managing your variable costs and your claims expense in our first tip. But here we have fixed costs, which make up a significant portion of your premium as well. So that's why it's important that every dollar is pulling its own weight. These costs aren't just a drop in the bucket. They can account for up to 30% or more of your total spend. So here's 3 hidden places to look when trying to lower your fixed costs as well. Number 1, let's start with broker compensation. This shouldn't be confidential. What should be disclosed is direct compensation, fees or commissions paid by you, the employer, or maybe even indirect compensation, payments from the carriers, PBMs, vendors, including bonuses and overrides, as well as revenue sharing arrangements. And then finally, you want to make sure that any conflicts of interest are disclosed. Brokers are required to disclose compensation over $1,000. You should know exactly how much your broker is getting paid and what you get in return. Next, we hit on this earlier. TPA fees can vary significantly based on several factors. Take a look at this chart over here where it shows basic services starting at $20 all the way up to $150 PEPM for TPA administrative services. The variation in fees is really because of a couple things. Number one, the complexity of the plan, but also the level of the services being provided. And then finally, the size of the group. Do you know what your TPA fees are actually there for? Do you know what you get in return from your TPA fees? We suggest that you ask your TPA for administrative services contract and see what you're paying and what's included in your fees. And finally, your stop loss insurance. Certain carriers charge extra fees for policy administration or minimum premium requirements, or sometimes they even charge for claims processing. And a little known secret is that some brokers will even charge you a service fee while taking a separate commission from your stop loss policy. Hidden costs here can amount to an extra 5 to 15% in total stop loss costs. Ask for and review your full stop loss policy contract. It's time to stop the bleeding and take control of every hidden cost. In order to do so, you have to start asking questions. That's exactly what Salcomp did. They were struggling with high fixed costs and had no idea why. That's when they dug into how much their broker was getting paid. Turns out their broker, who never evaluated the market, was charging them a 5% commission, leaving them with bloated costs and few options to look at every year. Because every year when their premiums increased, so did their broker's compensation. This is a premier example of a misaligned incentive that you want to eliminate in your health plan. What we did with this company is we helped them evaluate alternative funded plans, saving $108,000 with the same contract terms and the same plan design. Again, sacrificing no coverage. We also moved them to an aligned broker compensation structure, a PEPM versus a percentage of commission. This saved the company an additional $26,000. In total, they saved $134,000 in the first year alone without sacrificing any coverage. Go ahead and DM me transparency. Send me a message on LinkedIn and just say transparency, and I'll set you up to get your custom health risk scorecard showing you exactly where to focus to cut your risk and control your costs. All right, let's get into our third tip here. So real quick, would you give your employees an unlimited credit card? Let's say a credit card with no limit. Call it an Amex Black Card. The answer is likely not, right? We put cost controls on things for a reason. And that's why our third tip and our final tip is to optimize utilization. You want to drive smarter, less expensive healthcare decisions. When employees don't have the right guidance, they're simply going to default to the most familiar or convenient option. The ER is right down the street. This leads to more out-of-pocket costs for employees, but also higher renewals for employers. So instead of cutting benefits, steering employees towards smarter choices reduces the spend without sacrificing coverage or access to care. Here's 3 reasons why you should start to optimize utilization in your health plan today. Number 1, you can stop overpaying for the wrong care. Whether it's unnecessary ER visits, low-value procedures, or treatments at high-cost providers, these all drive up your premiums and expenses unnecessarily. Number 2, boost your outcomes without raising costs. It's not just about spending less here, it's about spending smarter. Better utilization means earlier care, fewer complications, and lower costs long-term. Number 3, drive long-term plan sustainability. Health plan costs skyrocket when care isn't managed. Optimize utilization keeps your plan stable year after year without wrecking the renewals or benefits. You want to ensure that your employees are getting the right care at the right place for the right price. And it's done pretty simply, guys. Either utilizing concierge services, medical management, or chronic condition management. These are just a few of the ways that you can begin to optimize your utilization. Something as simple as providing a no-cost telehealth benefit is a great way to get started as well. TrexCon, another one of our clients, was seeing a combination of out of control ER utilization and high cost imaging claims. Employees would default to the ER for non emergencies and go straight to hospital owned facilities for things like MRIs and scans, costing the company thousands per scan. We help them create steerage incentives where if an employee used a lower cost imaging provider, they paid absolutely nothing out of pocket. So no cost imaging really incentivized their employees to use the right facilities. We also implemented a telehealth program with no copay, incentivizing employees to get care from telehealth first, driving down their costs as well. And then finally, we launched a second opinion program that prevented employees from getting unnecessary or unneeded surgeries. The result was huge. They cut ER claims by 40% and reduced their imaging costs by 55%. In total, they were able to save $750 per employee per year. This is for every employee enrolled without cutting coverage. They actually had the ability to improve their coverage. So here it is. Don't rely on your carrier or your employees to manage your spend any longer. You're footing the bill, and it's time to start managing this expense like you do any other expense. DM me transparency to get your custom health risk scorecard today so that we can get started and see where you're overspending. All right, guys, I'm going to give it a few minutes. If you have any questions about any of the stuff that we discussed today, go ahead and drop those questions in the chat and I'll take a few minutes to answer them here. In the meantime, let's talk a little bit about what a health risk scorecard is, just for those that are curious. A custom health risk scorecard that we'll provide to you can identify your top 10 cost driving conditions on your medical claim spend, as well as your top 10 prescription drugs on the RX spend. So if you're interested in knowing what's really driving the spend inside of your health plan, shoot me a DM or send me an email with just the word transparency, and we'll get you set up to have that custom health risk scorecard in your inbox within the next few days. Thanks for joining me today, guys. Look forward to seeing you next month.